All right, welcome back to Talk Tickers. Today we are doing a deep dive into SNDL's most recent Q4 2024 earnings call.
Yeah,
and
definitely a good one.
I've been following SNDL for a while now, and this seems like a pretty big turning point for them.
Yeah, it's pretty exciting stuff when you see a company like this kind of turn the corner and become profitable and free cash flow positive.
Absolutely. I mean, that's one of the big takeaways here, right? Record full year revenue, gross profit, gross margin, and that free cash flow.
Yeah, and this is the first time they've ever done that in their history.
Yeah.
So, pretty monumental.
Definitely. And this comes on the back of their pretty strong performance in the cannabis segment.
Yeah.
Yeah, they've had 12 consecutive quarters of
12 straight quarters of growth.
Of revenue growth in cannabis.
Which is
pretty impressive.
Outperforming the market pretty significantly in a tough market too. So, got to give credit where credit's due. They're doing something right over there.
Absolutely. They're really focused on this and they're seeing some serious success with it.
And they're not afraid to make acquisitions either.
Yeah.
They're buying up companies and really trying to build a strong foundation in that space.
And they're not just doing cannabis either, right? They still have their liquor segment.
Right.
Which seems to be performing pretty well.
Yeah, they had some market headwinds there. I mean, liquor sales are down overall, but they were still able to improve profitability and cash flow in that segment to record levels.
Yeah, so it seems like even though they're facing some, tougher conditions, they're still managing to be more efficient.
I mean, exactly. They're squeezing out more profits.
Yeah.
Which is what you want to see.
Absolutely.
Especially in a challenging environment.
Okay, so let's dive into some of the specifics of the quarter, right? Their Q4 2024. They reported record net revenue of $257.7 million.
Right.
Which is a 3.7% increase year over year.
Yeah.
So where is this growth coming from?
Well, the cannabis segment is really driving the bus here.
Okay.
It grew 16.5% year over year.
Wow.
So that's the combined cannabis business.
Yeah.
And that includes their recent acquisition of Indiva.
Yeah. Oh.
Which we'll talk about more later. But that's really where the growth is coming from.
Okay. Makes sense.
The liquor retail segment actually declined a little bit.
Yeah.
But overall, the cannabis growth more than made up for it.
Okay, so cannabis is really the star of the show here.
Definitely.
And on the profit side, they also had a pretty impressive quarter.
Right. Gross profit increased by 20% year over year.
Wow.
Up to $68.8 million.
Yeah, and that's a record gross margin of 26.7%. So they're really becoming more efficient.
Yeah, they're making more money on every dollar of sales.
Exactly. And then of course the big news, right? The positive free cash flow.
Right, $11.6 million in Q4.
In Q4, and then for the full year, $8.9 million.
Yep. First time ever.
Which, again, first time ever, right?
Right.
So that's a really big deal.
It is, yeah.
Now they did mention a non-cash fair value adjustment that negatively impacted their adjusted operating income.
Right.
So can you explain what exactly that means?
Sure. So they have this investment arm called Sunstream.
Yeah.
And they invest in other cannabis companies.
Okay.
Primarily in the U.S.
Okay.
And because of some recent events like the failed cannabis legalization vote in Florida.
Yeah.
And some of those companies not performing as well as expected.
Yeah.
The value of SNDL's investment went down.
Okay.
On paper, at least.
Yeah.
And so that's what that adjustment is reflecting.
So it's not that they actually lost money.
It's not an actual cash loss.
Yeah.
It's just a paper loss.
Okay. So if we exclude that adjustment, what would their adjusted operating income have looked like?
It would have been positive.
Okay.
So it's kind of a one-time thing.
Yeah.
That's skewing the numbers a little bit.
Okay. So their core business is actually performing quite well.
Yeah, exactly.
Okay. Let's dive into some of the individual segments here, starting with liquor retail.
Okay.
As we mentioned, they had some headwinds in this segment.
Yeah, revenue was down 3.4% in Q4.
Yeah.
They're attributing that to just a general slowdown in liquor sales across the board.
But they did manage to improve their profitability.
Yeah, they expanded their gross margin.
Okay.
And they also implemented some store efficiency initiatives.
Okay.
That helped to improve their bottom line.
All right, so they're really focusing on being more efficient with their liquor retail business.
And they're doing a good job of that.
Yeah.
Despite the tough market conditions.
And what's their outlook for this segment going forward?
Well, they're expecting flat revenue growth for the full year.
Okay. Which makes sense given the current market.
Right. And then longer term, they're expecting a more modest growth rate of 1 to 1.5% per year.
Yeah.
But they also think that some of that volume decline could be offset by pricing.
Yeah.
So they're going to try to manage that.
Yeah. So they're not expecting huge growth in the segment.
No.
But they're still optimistic that they can maintain profitability.
Right. And they can make it work.
Yeah.
Even in a tough market.
Okay. Let's switch gears to cannabis retail.
All right.
Which seems to be the real growth driver here.
Yeah, this is where the excitement is.
Yeah, so they had record performance in both Q4 and for the full year.
Record revenue, record profitability.
Yeah. And in Q4 specifically, they hit $83.2 million.
Yeah, 10.7% growth.
Yeah, 10.7% growth year over year.
Year over year.
And this was driven by a couple of factors.
Yeah. Same-store sales growth was very strong.
Okay.
6.3%.
Okay.
So that means that their existing stores are doing better.
Yeah.
They also opened some new stores.
Yeah.
And they acquired the Dutch Love chain.
Okay.
So all of that contributed to the growth.
And for the full year, they hit $311.7 million.
Right. Up 7.5%.
Yep. With a 3.5% same-store sales growth.
Yep. So they're really showing some impressive growth here.
They did mention that they made some investments in promotional activities that impacted their gross margin.
Right. So they spent some money on marketing and promotions, and that did hurt their margin a little bit in the short term.
Yeah. But they're doing this to...
But the idea is to...
try to strengthen their market position.
Yeah, to gain market share and build brand loyalty.
Yeah.
So it's a long-term play.
Yeah, it's an investment in the future.
Right.
So how did all of this affect their operating income?
Well, despite the pressure on margins from those promotions, they actually saw a significant increase in adjusted operating income. Okay. Both in Q4 and for the full year.
So it seems like the investments are paying off.
Yeah, they're growing revenue, they're controlling costs, and they're improving their profitability.
So overall, a very positive picture for their cannabis retail business.
Yep.
Okay, let's move on to cannabis operations.
All right.
Which is the production side of their business.
Right. So this is where they actually grow and manufacture the cannabis products.
And it sounds like they had a pretty transformative year in 2024.
They did. They had record financial performance across the board. Revenue, profitability, everything. Yeah.
So in Q4 specifically, they hit $37.1 million in revenue.
That's a 42% increase.
Yeah, a huge increase.
Year over year.
And that includes a $7.5 million contribution from Indiva, which they recently acquired.
Right.
And for the full year, they hit $109.5 million.
Yep, up 26% year over year.
So really strong growth there.
Yeah.
And how about on the profitability side?
Well, they hit a really important milestone here.
Okay.
They had positive gross margin for 4 consecutive quarters.
Wow, that's impressive.
It is.
And it reached 27.2% in Q4 and 19.9% for a full year.
Yep, and that's driven by productivity improvements in their facilities.
So they're getting more efficient.
Exactly, and they're also seeing positive operating income and adjusted operating income.
Yeah,
both in Q4 and for the full year.
So they're really turning this segment around.
Yeah, they're making real progress.
Okay, so what's driving all of this growth and improved profitability?
Well, they're seeing strong growth across a variety of product categories.
Okay.
Including pre-rolls, vapes, and edibles.
Okay.
And they're also expanding their distribution and improving the quality of their products.
Yeah.
So they're hitting on all cylinders here.
Yeah, it seems like they're really firing on all cylinders.
They're also seeing some early momentum in international and B2B sales.
Okay.
So they're not just focused on the Canadian market. They're looking to expand globally.
Well, and speaking of being active, right?
Yeah.
SNDL has been making a lot of strategic moves lately.
They have. They've been busy.
With acquisitions and other initiatives.
Lots of acquisitions, lots of investments.
So let's touch on some of the key highlights here. Okay.
They fully privatized NOVA Cannabis.
Right.
Right, by acquiring the remaining minority stake.
So they now own 100% of NOVA Cannabis.
They also acquired Indiva.
Yep.
Which we talked about a little bit earlier.
Right, the edibles company.
Yeah, and this makes them the largest manufacturer.
Largest in Canada.
Of infused edibles in Canada.
Yeah.
So they're really doubling down on the edibles market.
They see a big opportunity there.
Yeah, and they also got approval for the transfer of the parallel license in Florida.
Yep. Which
is a key step in finalizing the restructuring of their U.S. investments.
Yeah.
And they also acquired a 5.4% stake in High Tide.
Another big Canadian cannabis retailer.
Yeah, so they're really making moves.
They're not sitting still.
In the cannabis space.
Mm-hmm. They're very active.
And they also reactivated their share repurchase program.
And they bought back 10.8 million shares.
Yeah, so they're returning value to shareholders by buying back their own stock.
Yeah, and they also applied to list on the Canadian Stock Exchange.
The CSE.
Yeah, the CSE, which they believe will provide their shareholders with more flexibility.
More options, more liquidity.
Yeah, and it could also open up some opportunities in the U.S. market.
Potentially.
But we'll get to that a little bit later.
Yeah.
So overall, their balance sheet is looking very strong.
Very strong.
Right. They ended the year with $218 million in unrestricted cash.
And no debt.
Zero debt. Which is amazing.
It's very impressive.
It gives them a lot of flexibility.
Yeah, it gives them a lot of flexibility to make these moves and to continue to grow.
Exactly.
So any other key operational highlights that you want to touch on?
Sure. There were a few other things that I thought were interesting. They gained 40 basis points of market share in cannabis retail.
Yeah.
So that means they're taking share from their competitors.
Which is a good sign.
Yeah, it is.
And then in liquor retail, even though the market is shrinking, their private label offerings are actually growing.
Yeah, so people are buying more of their own brands.
Okay.
Which is a good sign. For their brand recognition and loyalty.
Yeah.
Their cannabis operations added 78 new distribution points. In Q4.
Okay.
So they're getting their products into more stores.
Yeah.
They achieved $8 million in productivity improvements in the quarter.
Okay.
Mainly in cannabis operations. Yeah. So they're getting more efficient with their production.
And they also had $4.5 million in revenue from data licensing.
Yep. So they're monetizing the data that they collect
from their retail operations.
Interesting. And they realized $5 million in overhead savings.
Through efficiency gains and restructuring.
Okay, so they're really focused on cutting costs and improving efficiency.
They are.
And they're also on track to deliver $15 million in annualized savings from their restructuring program.
So they're doing a lot of good things.
Yeah, it seems like they're really executing well on all of these initiatives. Mm-hmm. And they're also focused on talent development. Yeah,
they talked a lot about investing in their employees and making sure that they have a good culture and a good work environment.
Yeah, so it seems like they're
it's important.
Really paying attention to all aspects of the business.
Right.
And they've also set a pretty ambitious long-term goal.
$100 million.
Yeah, $100 million.
An annualized free cash flow.
In annualized free cash flow.
Within the next 3 years.
Within the next 3 years.
That's their target.
So they're really aiming high.
They are. They're very ambitious.
Okay, let's shift gears now and talk about their U.S. investments.
Okay.
As we mentioned earlier, they had that non-cash fair value adjustment.
Right. Related to Sunstream.
Yeah.
Their investment arm.
Yeah.
So can you give us a little bit more background on that?
Yeah. What's the bigger picture here?
Yeah. So Sunstream is this investment vehicle that SNDL uses to invest in U.S. cannabis companies.
Yeah. Okay.
And as we talked about earlier, there's been some negative news in the U.S. market.
Like the Florida vote.
Yeah, like the Florida vote. And some of the companies that they've invested in haven't performed as well as they hoped. So that's led to this fair value adjustment.
Okay. And SNDL can't actually operate in the U.S. right now?
Right. They can't touch the plant, as they say.
Because of regulations.
Right, because of federal regulations.
So they're kind of limited in terms of what they can do.
They can invest, but they can't actually operate.
So what are their priorities for deploying capital in the U.S. going forward?
Well, their first priority is to build out their Canadian infrastructure.
Okay.
So they want to make sure that their Canadian business is strong.
Yeah.
And then after that, they'll look at opportunities in the U.S.
Okay. So they're not ruling out
no U.S.
No, not at all.
But they're
being cautious.
They're being cautious.
That's right.
Strategic about it.
And how does the CSE listing tie into all of this?
Well, the CSE is generally seen as more cannabis friendly than the NASDAQ.
Yeah.
So by listing on the CSE, it could give them more optionality in terms of their U.S. strategy.
Yeah, it could open up some doors.
It could.
But they haven't made any concrete decisions yet.
Yeah, you're still exploring their options.
Okay, so the U.S. is still on their radar.
Definitely.
But they're being very strategic about it.
They're not going to rush into anything.
Okay, so let's step back now and think about the bigger picture here.
The big picture.
What are the key takeaways for investors?
Well, I think that the biggest takeaway is that SNDL is really executing well on their strategy.
They're showing strong growth in their cannabis business.
Especially in cannabis operations.
Yeah.
That's really the engine of growth right now.
Yeah, and they're improving their margins and they're generating positive free cash flow. Wow. So those are all very
positive signs.
Positive signs.
Yeah.
And their acquisitions and investments show that they're
being proactive.
About consolidating a market.
And building a strong platform.
Yeah, and the CSE listing could open up some interesting opportunities in the future.
In the U.S.
Yeah. But of course, there are also some risks to consider.
They always are.
The liquor retail segment is facing some challenges.
It is, but they're managing it well.
Yeah, and the U.S. cannabis market is still very volatile, so their investments there could be affected.
They could.
But overall, I think the outlook for SNDL is pretty positive.
I agree.
They're well positioned for growth.
They are.
And they have a strong management team.
And a strong balance sheet.
That's executing well on their strategy.
I'm bullish on them.
Okay, so now for the fun part of the show.
All right.
This is not financial advice segment.
This is not financial advice.
Where we come up with some outrageous but plausible trade ideas.
Outrageous but plausible.
They've got to be creative.
Based on the earnings call.
Yeah.
So what do you got for us today?
Okay, so given SNDL's big move into edibles with the Indiva acquisition, and the fact that the cannabis beverage market is still pretty young, I think there's an interesting opportunity here to invest in companies that are developing innovative cannabis beverage technologies.
Like what kind of technologies?
So I'm talking about things like nano-emulsification for faster onset. Unique flavor profiles that mimic popular non-alcoholic drinks. Maybe even packaging solutions that enhance the consumer experience. So basically companies that are pushing the boundaries of what's possible with cannabis beverages. Because as SNDL looks to expand their edibles and beverage offerings, they're going to need access
to these cutting edge technologies.
So the idea is to invest in the companies that are developing these technologies.
So the picks and shovels of the cannabis beverage industry.
Okay, and why is this outrageous but plausible?
Well, it's outrageous because it's a very speculative bet on a very nascent industry. But it's plausible because SNDL has shown that they're willing to make big bets on the cannabis market. And if they see an opportunity to become a leader in cannabis beverages, they're not going to hesitate to acquire or partner with these smaller companies.
So it's a high risk, high reward play.
High risk, high reward.
But it's definitely interesting.
Something to keep an eye on.
All right. Well, that concludes our deep dive into SNDL's Q4 2024 earnings call.
Hopefully that was helpful. We covered a lot of ground. Hopefully this has given you a better understanding of what's driving SNDL's performance.
Right.
And as always, the trade idea that we discussed.
This is not financial advice.
This is not financial advice.
Do your own research.
Do your own
Talk to your financial advisor.
Talk to your financial advisor.
Don't just blindly follow our crazy ideas.
Yeah, this is just for informational and entertainment purposes.
Right.
So what were your biggest takeaways from this deep dive?
What stood out to you?
What questions do you still have?
Yeah.
We encourage you to do your own research.
Always do your own research.
And to come to your own conclusions.
Right.
And join us next time on Talk Tickers.
Yeah.
For another insightful earnings call breakdown.
We'll see you then.
All right. Thanks for listening.
Take care.
Bye.
Bye.